Hi, and welcome to Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steve Van Meter. Let's get right into this. Some moving averages: 50 days green, 100 days blue, 200 days tan. These are the colors on my screen. Price versus momentum. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often but not always leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with timing a trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Now remember, we are switching over last week to some ETFs because I do not have volume price on in my program on the major equity indices, so we have to use ETFs, but in your program you might have that. So the feedback was really good. So let's take a look at the S&P 500. Bullish across the board. Let's go look at a chart. I mean, I almost should not be surprised. Everyone's bullish about stocks. Everyone's crammed into the same stocks, even worse. But what happened? We got a move below the 50-day moving average, and investors said, nope, we're going to count that as a tag, and it bounced off the 50-day moving average. Now, as an investor, what you're looking for is the strength of the bounce. So right now we're sitting at all-time highs, just slightly above the prior all-time high. You can see where we've got this purple line. There's a fairly heavy zone of shares traded. So there's your underhead support, or underhead, overhead resistance, not underhead. That doesn't make a lot of sense. But anyways, there's your support level below. And if you go down to, say, this 340 range on SPY, what you find is that is the pretty heavy zone of support over the last 12 months. So even if it rolls over and heads down, it's got a lot of support right there. But so far, investors remain bullish, and the data says they're bullish. All right, on to the Qs. NASDAQ 100, no change on the screens. Let's see what we've got from a chart perspective. Not as pretty as the S&P 500. You can see the NASDAQ is under its 50-day moving average. Now in the past, this hasn't been a major problem. It's bounced off its 100-day. Said that would be a possibility. It bounced off its 100-day now. Those who love the tech stocks need to see the NASDAQ get out of this zone here of heavy support and over its 50-day moving average and reclaim that all-time high. That's what it wants to see. If this rolls over, the next level of support on the Qs is going to be right around 292, and then below that at 271. So keep an eye on those levels, and we'll see what tech stocks do. All right, on to the small caps, Russell 2000, and we've got some slight change on the short term on price. That's not really a big deal. Let's go look at IWM here and see where it is. IWM, there it is. All right, and actually I think that was from last week. I believe I think I forgot to update that one. I think it's all green. So we'll just pretend it's all green because this is a chart pattern of all green where it bounced just strongly off its 50-day moving average. Again, everybody's super bullish about the U.S. economy reopening, and yet in the midst of a liquidity trap, when you have less money going around and you have stimulus, which is deflationary, we'll talk about that in the macro show coming up this week, as it leads to the destruction of money, surprisingly, not what people think it does. When the economy reopens, there's less money for everyone, meaning the economy actually will do worse. It was actually better off when it was in lockdown because that money that was out there went to a small number of companies. Now, as more businesses reopen, people try to get back to work, they'll find there will be less demand. But investors believe stimulus is massively stimulative, and you can see it in the price chart here. Major level of support way below, and not a lot of cause for concern. You can see there is a support level building kind of right here on IWM. Let's put this line up here at around 212. Not as strong as the one below, but this is major bet on the U.S. economy. And now we move on to the energy sector, which is another sector everyone's super bullish on. But remember, when it comes to energy, production and everything else has been lower. That can easily get turned up. And a lot of people just don't understand that production matters here. And as I said in the last show, look for XLE to try to get up to this 55 50 level. It wanted it. Major level support. It's not a strong level of support. It's here in this $44 range. And then there's a heavier zone right here at 38. But right now, not a lot of volume traded over the last 12 months. Investors want this. They want higher energy stocks because they think everyone's going to be able to absorb those prices. Now, remember, when you have higher food and energy prices, that means less discretionary spending by everyone else. So will the economy be able to absorb it? We'll find out. Same story is here with XLF. You know, you look at the financial sector, and what do people think? They think that everyone's going to go out and borrow. And yet, what does the credit data say? Well, it says just the exact opposite. It says people aren't borrowing. And even worse, what do people do with their stimulus checks? They pay off debt. That does not lead to more borrowing. That leads to less money. And so anyways, everyone's bullish on the bank stocks, driving their prices even higher. And the level of support there is between 31, otherwise breaking new highs. Everyone's super bullish as they believe everyone else is out going to borrow money. They're not borrowing money. They believe everyone else is. How about the utility sector? This is an interesting chart. We saw just a small change in the ultra short term. No big deal there. The 3-month is negative and rising. 6 and 9 month are up. But let's look at the utility chart, because this is interesting. It slammed right off of that zone of support, right at its 12-month volume profile at the maximum level. It just held. So what does that tell you? That's where the prior buyers are at. That's where they want to buy again. And now it's racing upward into this overhead support level around $63 to $64 a share on the utility sector, where sellers have been at. So here you can clearly see technical analysis working where the buyers are at, where the sellers are at, and the volume profile offering some validation. How about the industrial stocks? Nothing but bullish news there. We'll move on to gold mining stocks, and a little bit of a mix of a change. Ultra short term has flipped on price and annual momentum. Long term, we've gone bearish on annual momentum. 3, 6, and 9 month now have flipped all to negative and rising. That's a positive sign, but there's some things in the chart and not so positive. Let's take a look at GDX. And what's the problem with GDX? It's still sitting under its 50-day moving average. It's caught between this heavy supply zone. This $31 there's your top of your head and shoulders. So prior buyers at 31 showed up again. There were still sellers in here. You notice it didn't just pop right off of it, and it's moving right up into a zone where sellers have been. So you can see the heavy resistance overhead is at 35.69 right in there. Right now there is absolute resistance at 33.50. You get rejected here, and this thing is likely to roll over and hit into the 20s and possibly even lower. So not a lot of strength here. So even though we're seeing some conditions from a annual momentum perspective, and we see the 3, 6, and 9 month start to rise, when you really analyze the chart, you can see this isn't a strong position yet. It could be, but this is still too early to call that this is the bottom in GDX. Like I said, this downward trending 50-day moving average is not good. This overhead resistance is not good. But if this rolls over 31, we'll probably take out, because these people who bought here will roll over, and party will be over for the miners. How about emerging markets? No change here. So let's go look at EEM, which again is now largely China, since they got included into a lot of the major indices recently. And it's sitting right under its 50-day moving average. So now you're starting to see what looks like a topping pattern. It ran into resistance right at a level up here where there's a fair amount of shares traded hands. But this is what a topping pattern starts to look like. It gets under its 50-day and starts to struggle underneath it. So if you're bullish on EEM, you're bearish on the dollar, you want to see this thing break through. Otherwise, you start to look at a rollover on this, and it's down to the 51. Major level is going to be here in the mid-40s, where you see the last shares traded hands. There's not a lot of shares up here between, say, 45 and the current price around 55. Well, there's a lot of shares traded hands. So there you could see some quick weakness flop over here in the emerging markets. Let's go on to Treasury bonds with TLT. Well, no surprise, this is the most bearish chart in the world right now. And if TLT was a stock that has been as shorted as it, and had all, if you look at the technical indicators, they're all about as negative and as historically as you can get. If this was a stock and everyone knew just how short it was. Everyone was short. People will be piling in, but because it's bonds, they're not. But we may have a major announcement from the Fed on the 17th, so be sure to tune in to Macro Show on Wednesday for that. We got a big slam down in the overnight on Friday, and buyers stepped in again under pretty decent volume. If we zoom in, I mean, you look at the volume here on Friday, and again, it just continues to show that buyers are showing up. They want to buy this because they know, if you understand the credit data and how it influences bond prices, then you know that a credit contraction is not bullish for yields. You cannot get sustainably high yields when credit is hard decelerating or contracting, and we're very close to seeing a massive contraction in credit at a time when the economy is supposed to be reopening. Plus, if the recession is indeed over, well, guess what happens to interest rates? They still go down. They actually make new all-time lows because balance sheets of consumers or businesses still need to be repaired. Now, there's a lot of overnight gaps in this, and those can be quickly filled. So if you look at this, it's heavily shorted, lots of overnight gaps, and not a lot of volume in between current price and, say, 151. What will happen next week? Anybody's real guess. I mean, you have to just assume there's going to be more people shorting this whenever possible. How about high yield bonds? No change on the price and annual momentum, but the 3-month momentum went negative. Now that's a interesting cue. Not something to get too excited about, but it's a potential indicator. And you look at it's under its 50-day moving average, now trying to find support at its 100-day. But look at where all these shares are traded hands, right at 87. So what does that tell you? This is where sellers have been getting out. And next level of support for high yield bonds, this is now not a good sign for the broad equity market, is at 84.70. So this is starting to look like a topping pattern as all these shares were transacted up here. Again, not a positive sign for the high yield bond market. How about gold? It's bearish. It tends to follow bond prices, so this should be no surprise, although a lot of people are not excited about that. But yeah, let's take a look at what's going on with gold. Not much of a different situation than we saw in GDX. It's sitting at this major level of support around 1687, bounced off of that right into this zone here where there's you can see all these shares traded hands right into overhead resistance. Gold needs to break through this. It really, if you're, I mean, of course, if you're bullish on gold, you got to be bullish on bonds. If gold rolls over and goes, then what you want to see, what you're expecting now is a change, a risk off move, non-inflationary cue, deflationary, bonds take off. That's what I've been looking for. Haven't found it, but I know we'll get to it. It'll happen at some point. How about silver? I think the only thing that changed in silver is 6-month momentum went negative. Now let's take a look at what's going on with silver, since this is playing out very technically very nice. And you see there is your support level right at around 24.50. So we'll just use some round numbers. And there's your resistance at 27. And what happens at 27? That's where your sellers are at. Buyers are a little bit below. Right now, it's under its 50-day moving average, bouncing off its 100. Not a strong picture because sellers have been very dominant at 27. Look for silver at some point to revisit that 24.50 level. And what do we have last but not least? The almighty dollar that everyone thinks is going to be worthless. No change between price and annual momentum. 3-month momentum is now positive and rising. 6-month momentum is negative and rising, and 9-month momentum remains negative and falling. There's a lot of really good indicators. Now, annual momentum is not going to break for a while. If we go back and look at what was going on 12 months ago, it's not going to break higher. It's going to take perhaps a couple of months or a big move in price. But look at this. This is a beautiful bottoming pattern now, right? We see it come down, not quite a double bottom, crossed over its 50-day moving average, found support at its 50-day moving average. 50-day is now rising. You can see there's still some negative momentum play up here that'll work itself out. It bounced off a overhead resistance level. It's coming back down, looking to confirm one or both of its moving averages. So, at this point, could we see the dollar bounce off the 100-day? Maybe it'll go sideways and catch its 50-day. That this is exactly what you want to see. Now, from volume profile, we look at UUP, and we see around 25.25 on UUP, where you back up here right toward the high end of that trading range. So let's go back to the dollar. And what does that tell us? That the Next big move for the dollar is it upwards of 93.70 right there at that kind of right in the middle of that trading range there to the top end of it. So for the dollar, which is no one is counting on the dollar rallying. They're betting on a weaker dollar, but this, my friends, is a big indication the dollar's bottom. Dollar gets ripping higher. There goes gold. Bonds to the upside and stocks all the way to the downside. All right, I'm your host, Steve Van Meter. Thanks for joining me. We'll see you on Monday for the macro show, which I promise you won't disappoint. The content of this video is provided as educational information only. It is not intended to provide investment or other advice. Materials not to be construed as a recommendation or solicitation by or selling security, financial instrument, or participate in any particular trading strategies. Video was prepared by Steve Van Meter. Personal capacity opinions expressed in video that do not reflect the view of Atlas Financial Advising or Steve Van Meter Financial.